Hi everyone, my name is Kavita and I'm here to talk to you a little bit about net operating income today. So last time we talked about ERV, which meant net operating income divided by the cap rate would equal the value of the property. So what exactly is net operating income and how do we reach that number? Well, number one, what we have to do is take the gross potential rents of a property. So that means even if you have 2 units vacant in a 25 unit apartment building, you do include those 2 units in there too, which sometimes people call pro forma rents. So let's say you take the gross potential rents, you minus out the credit losses, you minus out the vacancy, and then what you get is your effective rental income. And out of that, you go back and you add in your other income, laundry, parking, any other additional income sources that you have. You add those in there. Now what you do is you have gross operating income, okay? And you take that gross operating income, you deduct your operating expenses out of there, including property taxes, personal taxes, property insurance, any kind of repairs you've done, payroll, offsite management fees, everything gets included in that. Now what you're left with, once you deduct that, you get your net operating income. So net operating income is not cash flow. So for cash flow, it's different for everybody. Now remember, net operating income does not include debt service in there. So if you have a loan payment, that would be deducted out of your net operating income. So you take your net operating income, you deduct your loan payment out of there. You also deduct leasing commissions too. Don't forget that. If you have vacancy issues and you're going to be using a leasing agent for that purpose, you need to deduct those leasing commission fees out of there as well. Another thing that you should never pass up is also reserves. You got to have reserves in there too. So once you do that, then you end up with cash flow. So next time we're going to talk a little bit about cash flow. We're also going to talk about the yield. Remember, everyone talks about cap rate. Nobody talks about your internal rate of return. That is something that's very important. If you're going to hold something for, let's say, 5 years, you need to know for those 5 years, how much of a yield are you looking at? How much of a return are you looking at? Because let's say your first year cap rate is high, second, third, fourth year, it may not remain the same. So that's for next time. I know I probably overwhelmed you with a bunch of terms, but there's a lot of information in commercial real estate where it's just kind of chipping away at the surface right now. Hope you enjoyed this video. If you liked it, please press the like button. If you have any questions, leave a comment. Definitely for me, if you like the video and if you want to leave a positive comment, that would be great. If you have questions, leave it in the comment box as well. See you next time. Take care. Bye-bye.